Hey guys, how's it going? Welcome back to my channel. This is Shuril and you're watching Millennial, where we talk about all things money that they don't teach you in school. We have all heard from our parents or grandparents at some point in life, hey Shuril, buy a house. That's the best investment you can make in your life. Hey Shuril, buy some real estate and just hold on to it for the rest of your life. Nah, I would much rather spend that money on eating out and buying Pokemon cards instead. In today's video guys, I want to talk to you about how investing in real estate can make you a ton of money over time, why real estate is considered to be a safer form of investment, and if you should consider to buy real estate in this economic climate. So before we jump into the details, go ahead and invest in that like button to help me out with the YouTube algorithm, and subscribe to my channel for more content on personal finance. I post twice a week on this channel now guys, so don't miss out on this opportunity to get smarter with your personal finance through my videos. Guys, there are a ton of advantages of investing in real estate. If you are able to find a decent sized property in a good neighborhood, your investment in the property can grow 5 times to sometimes 8 times over the next 30 years. This is similar to investing in the stock market, except it can be much safer depending on where you buy the property and at what price. If you go to your browser and search for the historical growth in the average prices of houses, you will find that home prices in the United States have grown by roughly 4% per year over the past 30 years. So if you bought a $500,000 house 30 years ago, today the house would be worth a whopping $1.6 million, and you literally would be a millionaire by just making your monthly mortgage payments over the past 30 years. Apart from the growth in the home prices, another way you can benefit from buying real estate is in the form of taxes. Now, the going rate for taxes on your earned income in the United States is anywhere between 25 and 35%. But if you were to put the interest payments on your mortgage towards deduction on your tax return, you can easily bring your taxable income down by a few $1,000s each year. This does not stop here though guys. One major way real estate investors make money with their investments is by buying and renting their properties for generating a monthly cash flow. Instead of investing your $500,000 in a single family home, you could put it towards buying a couple apartments, live in one of those apartments, and rent out the other. You could also buy a duplex instead of apartments and live in a portion of the house while renting out the other. As long as you are doing this correctly, you can easily offset the cost of living in your own home by generating enough rent from the second portion each month, and then writing off the maintenance payments, interest payments, and depreciation on the rented apartment on your tax returns each year. Trust me guys, this has made a lot of investors out there a lot of money. Now, let's talk a little bit about why real estate investments are considered to be generally a safer form of investment. Investing in real estate also means that you are buying the land that the home is built on in most cases. Although the value of the home depreciates over time, as wear and tear takes a toll on the home if you don't keep up with your investments, as the windows start to fall apart and the roof starts leaking, and suddenly the floral wallpaper that you once thought of as being the best thing on the market isn't desired that much by new home buyers currently looking for a place to call their own. But the land that your home is built on never loses value. Even if you were to completely tear down the house that you were once living in, you could still sell the land that it was built on for as much as 50% of the price of the home. Secondly, real estate is considered as a tangible form of investment. This means that when you invest in real estate, you always have something to show against your investment. Instead, when you invest in the stock market, you basically just buy and sell on your phone and don't carry around a tangible asset to show for the money you have invested in the market. Now guys, no market is completely safe when it comes to crashes like what we saw over the last year or what we saw in 2008. But with real estate, you always have something physical to show against your money. Let's say for example that you have a rental property that is occupied by some tenants, and suddenly the world starts crumbling around you and people start to lose their jobs, and your tenants cannot keep up with the rent payments and you have to get rid of them. You can either look for new tenants that may pay you more rent each month than your previous tenants did, or keep making payments on the rental property by yourself, or worst case, sell the property if you cannot keep up with the payments. This is not the case with investing in the stock market. You basically assume the entire risk of investing your money in a stock if the stock starts tanking. Investing in real estate is also a good hedge against inflation, guys. Like I said earlier, the average home prices in the United States have grown by about 4% per year over the past 30 years until early 2020. Inflation, on the other hand, has grown by roughly 2.5% over the same amount of time. To help you understand better, if you had $100 in the beginning of the year 1990, your $100 would be worth 2.5% less each year from 1990 until the end of 2020. Inflation basically erodes the buying value your money has each year. This is exactly why prices keep jumping up each year, and salaries have to go up each year, and cost of living also goes up each year. Let's say that you have not been investing your money anywhere else except your home over the past 30 years. At the end of the 30 years, your home is now paid off and worth much more than what you bought it for back in 1990. If you were to sell your home today, you would get back what you invested in the home for its cost over the past 30 years, plus the 4% average per year over the 30 years period that the value of your home has grown by. All this money would easily help you pay for your current and future cost of living if you use it wisely. But with the kind of circumstances we have had over the past year, guys, is real estate really a safe option for you to pursue? Since the beginning of the pandemic last year, a lot of people have lost their jobs, and a ton of businesses, both small and large, have shut down, causing financial stress for a lot of people. When I look back at the happenings over the past year, it's really difficult to piece together the puzzle that this chaos has been. As on one hand, a lot of people have been unemployed for the past 1 year now, whereas housing prices in the United States have jumped by a record 15.6% in the same 1 year. Normally, it is expected for housing prices to go up by about 2 to 4% a year to keep up with the rising inflation and the rising cost of living. But just the rise in the home prices over the past 1 year has stirred up a lot of confusion among home buyers. Due to the pandemic, most people were forced to stay at home with the economy shutting down in the first half of 2020, and local and state governments forcing most businesses to implement work from home measures. To this day, a lot of businesses are still following the work from home strategy, and this has forced many people to rethink their living conditions. Some people that were living in smaller apartments only come back to the apartment later in the day or only to sleep overnight now had no choice but to stay in that same cramped space for 24 hours, 7 days a week. This gave rise to significant demand in the housing market, with people looking for a more comfier place to live so that they can separate their living space and their workspace. A lot of people started looking for larger homes with dedicated rooms that they could call their office. At the same time, home listings on major real estate websites like Zillow and Realtor.com dropped significantly as people that still had their jobs were uncertain of their job security and timing of the economic recovery to go out and buy a different house, and decided to stay in their current homes for the foreseeable future. Along with this, when the pandemic first started, people started holding back from listing their homes for sale as they did not want strangers walking through their homes and spreading germs all over while they see it. This gave rise to a massive shortage of supply in the housing industry and fueled the increase in home prices over the past year. Another factor that has been responsible for home prices skyrocketing has been the dirt cheap interest rates. Mortgage interest rates have been at their lowest point over the past 50 years, adding more fuel to the already skyrocketing demand for homes in the market. As people were dipping into their savings to provide for down payment to buy homes and take advantage of such low interest rates, the very few houses that were listed on the market for sale started seeing higher than asking price offers, and buyers got desperate to purchase a home. Suddenly, even smaller homes started selling at a 5 to 7% markup on the asking price as multiple buyers started putting offers on the same home just to get in on the deal. This struck a chord with homeowners that weren't planning on selling in the first place and noticed that they could get much higher for their home than what it was worth. Supply of homes that started rising in the later half of 2020 and early 2021, while mortgage interest rates still stayed at their rock bottom. All of these factors combined sent average home prices soaring to record highs. As more homes sold at higher than asking prices, they fueled the average home prices to rise up even more. All of this seems to me like a bubble just waiting to pop. I feel like home prices are just waiting for a catalyst to show up that will just start dropping their average prices to significant new lows as buyers start shying away from buying new homes. As to what you should do in this market, my recommendation is that you should wait and watch the housing market for a while. As the economy comes back to some sort of normalcy and mortgage forbearance, which has been in existence since mid 2020 and will be in existence until the end of the summer, goes away, and finally mortgages that cannot keep up with payments have to be foreclosed early next year, my feeling is that home prices will come down and start normalizing and present a better opportunity for buying for millennials like us. All of this combined with interest rates that may start going up early next year may create more supply in the market than there is demand for and might bring home prices down significantly. But you know, guys, what thing on the market never goes down in value and provides you with fixed returns on your investments? The like button. Please, guys, it's free to tap and brings you a ton of value through the algorithm with more of my videos on personal finance. So, guys, do your own research on this subject and talk to your realtor for more advice. Again, all of this is just my opinion and meant for entertainment only. But as someone who is fascinated by economics and finance and investing and saving, this is the approach I would take if I was in the market looking for a new place to live. Once again, guys, thanks so much for watching. I really hope that my videos are creating value for you guys and helping you make conscious choices about your finances. I greatly appreciate you guys watching my videos. Go ahead and gently tap the like button for the YouTube algorithm, and don't forget to subscribe to my channel and tune in again next week for more content on personal finance.